Viva, viva, viva. Not a market update, but just a video that we're gonna talk about what to do now that we are in the deepest bear market, and you know, is that this time that most of us will get a fear. We, as you can see, fear and greed index, we are very extreme fear, and I think a lot of people, the question is, should I start the DCA now? Should I do dollar cost average? Should I just wait? When is the bottom? And the answer to that, my own opinion, my experience, is that you gotta find where are you comfortable with. For instance, if you have $1,000, you want to invest in a coin that has utility that you think it might survive this washout, this bear market. You just gotta be in mind that if the market goes down, that $1,000 that you invest in that coin will be, if it goes down 15%, will be worth 15 minus 15%, right? So, but you gotta be comfortable with, you invest $1,000 right now, and then the coin goes down another 15%, and then next month it goes down another 20%. You just gotta be comfortable. You gotta know that you only lose money when you sell, right? And that's why at a bear market, it's also a great opportunity, but at the same time, it can be your demise, right? Because you can do your DUI, your DUI, your your research, and then based on your research, you find a coin that you think it will survive, and then that coin disappears. So that's why you have to diversify your portfolio, and you just gotta take your time, man. Take your time to do your research, and take your time to actually look at a category that you think that you like. You kind of it makes you feel good when you do your research, when you look at it, the new things that are coming up in that category. Could be NFTs, metaverse, gaming, DeFi. Um, you know, it could even be just Bitcoin and hold the hype. You know, and eventually will go up, right? So, fear and greed index, we all know is very low. It's at a very low number. We want to take a look at at a quick look at a BTC, the chart for Bitcoin right now. As you can see, I'm not going to take a look at a weekly time frame. We actually just look at a daily time frame. I just want to get you guys up to speed what we're looking at for June to August. What I see, there's a huge resistance right here. If you see, I have drawn these two purple light lines. The first one is the resistance that I don't think August it will probably hit that. No, I don't think so. Just my own opinion. But as you can see, the resistance is 32,000. And then the other one that I think it might touch it, but it might be between August, August, no, October, September, October. It might be hitting 26. Yeah, between that, it might come back to here, or it might just go earlier, right? But it really depends what's going on in the market. It really depends the policies. If the inflation gets really bad, we might see a pump of capital in the market. As you know, the European Central Bank on last Friday, had an emergency meeting, not a call, and the European inflation is getting out of hand as well. As you know, I always people that actually know me, when we having debates in terms of European finance. I always said that the European Union, especially the finance structure that they did, is not sustainable. It would have fall, and now we'll see how weak it is. It is very weak, especially with what's going on in Ukraine, and it actually touched that button, the crucial button from Europe. Okay, so um, there's so many factors. What I'm pointing out right now is just something that for you traders, for those people that trade, still trading on crypto. It's a very major support and resistance point. So you got the 32 and you got the 26. It would take at least a couple good news and yeah, we need an event that will get us to pump at least 24. If we get to 24 and we stay there for at least a week or a couple of days, that might incentivize a couple of people to come in, and the bulls just might take it to 26. But I think as soon as it touched 26, it was just reversed right back again. And I think as soon as it touched 26, if he goes past 26, 32, it won't pass. 33 won't pass. And then we're going to come down crashing again. All right, so that's the quick market update for the Bitcoin. I'm not going to look at other coins, not even on the total market, everything. So if you guys want that, just let me know. I just want to show you this major channel that I have been watching for a while now, because Bitcoin was here on this channel between 2032 and 26. It stayed there for quite a while, since May and June. So, we touched it a few times and then got rejected. And right now, we've been here since June the 13th, and we are the 22nd right now, and haven't come back and retested again. And we haven't even tested 24 again. So it might be a little concerning, people thinking that we might be hitting the bottom right now, 20. I don't think so. Bitcoin right now has been between 20,000, 1, 2, 3, 4, 5, 6, almost a week now. And, I told you guys way before, when Bitcoin spends too much time at one level, it might break out or it might break down. So Bitcoin is going to complete a week now, staying between 20,000. So that might be something concerning later on. Okay, so let's want to share with you guys a few things here. What happens when the Fed raises interest rate? We don't really need to look at that, because we know if you look at what happened back in 2008 or back in 2018 or even back in 2020, you know what happened, right? So, but here, this is a very interesting article. I want you guys to just take a look at this article. I'm gonna link in the video below. There's two paragraphs I wanna share with you guys here. Just gonna highlight here. When the Feds raise the federal funds target rate, the goal is to increase the cost of credit throughout the economy. A higher interest rate makes the loan more expensive for both the businesses and consumers. and everyone ends up spending more of interest payment for very in simple words is that, you know, is very it gets a little, it gets more expensive for you to get a line of credit, you know, for you to get a loan, especially for those people, uh, they need line of credits to buy the supplies from overseas. So that might be something that might affect their businesses. And so, you know, every time the feds they raise rates, there's always consequences in the background. Okay, so continue. Those who can't or do not want to afford the higher payments postpone projects that involve finance. Um, it stimulates and encourages people to save money to earn a higher interest payment. See, that's the thing, right? So as soon as things, what you instead of you spend money in a system that the interest rate is very high for you to get a line of credit, even just a line of credit for you to purchase something or to renovate your house gets expensive. So what you're gonna do probably what you will historically people start saving their paycheck. They won't spend, they won't go to movie theaters, they won't do those activities that they spend a little money on the weekends, everything. People will start saving money. So that will affect the circulation of money. So, you know, we need money to circulate. You can't have money sitting and getting dust or money not being worked on the economy. So this reduces the supply of money in circulation, which tends to lower inflation and moderate economy activity, aka cool off the economy. Yeah, the target, I believe what the feds are doing is what my man says there is to cool off, is to lower the inflation, right? That's the whole thing. But that's the thing. They are a little late because the inflation is so high, and every time they increase the rates, there's so many repercussions and consequences in the background that um, they have to increase the rates slowly, very, very low. If they increase it very high, we automatically go into recession. So at the end of the day, even they increasing the small percentage, we're not out of the woods. We're still going to get into a recession. And the bad thing for us though are in the crypto market is that if we go into a recession right now, the crypto market would definitely go even lower than we are right now. We could see Bitcoin get into 10,000, even $6,000 per Bitcoin. Let's be real. Bitcoin don't have too much utilities. There's nothing we use. We don't even use Bitcoin for payments within the crypto market. So besides the you know besides the when we do transactions with Bitcoin, so not too much utility right now for BTC, just a store of value. Um, so you gotta when you do your DCY or when you do your research, you gotta look at the utility. You gotta look at utility. That's why you guys know I talked a lot, especially with DeFi, because DeFi is all about the centralized finance. We use a lot of stable coins because there's a lot of utilities for stable coins. DeFi is one of the categories that I know is being hammered right now. Is the categories that suffer a lot since we get into the bear market. But I still believe stable coins, DeFi is the way to go. It still will be the fastest. It will be the very category that will bring more people to the market. It will be the category that will get people to come in, the businesses, large businesses, small business to start using cryptocurrency for payments as well. So DeFi, I still believe, is one of the best categories to look at. It's just you really gotta You have to find those companies that have a good practice. Luna, you know, I got to tell you guys, my research in Luna wasn't too deep because a couple of red flags um, back in the days it came out, but I kind of ignore it. So you know, this time, if you guys read the report, we made a couple of comparison. If you look at it, you know the store of value and the way they did their algorithmic stable coins. It was just it wouldn't survive in a bear market the way they did it. So yeah, so a lesson there to learn, and let's not make the same mistake. You gotta really do your research. You gotta compare with what's working right now in the market. If there's something new that is coming in the market, especially in the crypto market, see if there's something similar in our market, in our daily day uh market. If there's something similar that is working for for many years, do a comparison, see what's similar, what's new, and would this new concept, would that work? Would that really survive when we get into the volatile market that we are right now? If it looks good, if you think it might work, and then get some opinion, especially people that actually know what's going on, and if they like it, they think it might work, and then based on your research, you think, I think it's a good choice for you to do your DCA coins and go it that way. That's what I'm doing. That's what we're doing for our clients. And yeah. All right. So let's jump in. One of my favorite websites for going back some historic data. I'm gonna share here. It's called the balance.com, which they compile all the interest rate back since the 1971. You have all the history, what happens when the feds they increase the interest rate, what happens, and the correlation with the recession and the interest rate rise. So this is a very good data for you to go over. I'm gonna go over a few just to show you what happens when they increase rates, what comes next, and what happens when they decrease rates to they lower so lower, what happens then as well. So that way you actually know what might happen from 2023 2024. So it kind of gives you an outlook in the future, right? So let's start. It starts 1971. For those don't know what GDP means, GDP means gross domestic product. The GDP was 3.3 in 1971. The unemployment rate was 6%. It's actually pretty high. And inflation was lower. It was low. 4.4 is is low compared to now, right? So, all right. So here, if you see the chart has dates, Fed funds rate, and events. All right. So right here, we don't have much of traumatic events that happen. They increase rates to 5%, and then the Feds lower rates to boost the growth of the economy. So they actually increased. It was at the inflation was at 4%. They increased the rates for up to November the 16th to 5%. All right. So 1972 GDP was 5%, 5.3. Employment actually lowered a little bit, 5.2%. Inflation was lower as well, 3.2%. What happens? They increase a little bit more the inflation. They increase more the interest rate. They increase it to up to 5.75. So that was 1972. That was that event. The Nixon, the value dollar creating an inflation. That's when the Fed's rates combined the 3.4 YOY, which is YOY means year over year inflation was a 5.7% increase. It was 3.4%. The year started at 3.2%, but at the end was 3.4. Okay, so 73 GDP was 5.6%, and employment 4.9%. It was increasing again. Inflation is just double to 6.2%. Don't forget that the Feds raised rates. Don't forget that they raised rates. What happened the next year? The inflation increased. You just doubled to 6.2%. So what happened in January the 19th? We had a stagflation. What is a stagflation? Stagflation, simple example for those that live in Angola, is our economy is what we call stagflation. Is that economy? There's not a significant growth. There's no growth. Prices are very for goods are getting very expensive, and employment is in a very high number. All right, so so defining stagflation is in an economy with a high unemployment and a little to no growth. Even prices are rising faster than usual. That's what a stagflation is. So January the 19th, the inflation doubled, and they got into a stagflation. So what happened at the if you look at it right here, and they kept increasing the rates so they can fight the 6.2% of the inflation that's kind of double. They kept increasing, and at a 7.25%, inflation was at a 5.2%. They actually lower 1%. They increased it again at 7.5. Inflation actually increased it, and they increase again very high 8.5%. Inflation actually increased it again. They increased it at 10.27%. What happens? We got into a recession. That's what I was telling you guys before. Every time they increase the rates, there's consequences in the economy, very, very high consequences. And if they increase it very aggressively, that's what happened. We fall into a recession. And this is what happened. You can follow, see, they started at 6% and they kept increasing to fight the 6% inflation. And they kept increasing. They actually, when they got to 7.7% increase, which means it was very expensive for you to get a line of credit, 7.5%, and then 8.5%. And they thought they could control it by increasing the rates. What happened? April was a 5.1%. They started at 6.2. So they thought increasing would have lowered. They actually lowered a little bit. They kept increasing. What happened? The inflation just got out of hand. They got out of hand, actually. They started increasing so fast. They so aggressive. They jumped from 8.5 to 10.25%. And then we got into a recession. And then in August, to fight the recession, what they did, they increased it again to 11%. The OPEC embarked on a worsening inflation in October. What OPEC means? For my subscriber, my good friends that work in the oil industry, they know what an OPEC means, which is the Organization of the Petroleum Exporting Countries. That's what an OPEC means. 1974, as you can see, the GDP was a negative 0.5%. Wow. A year ago, you were 5.6. And as soon as you get to a recession, you got a negative. Unemployment was 7.2%, was very, very high. Inflation was at 11%. Yeah, since we were in a recession. What happened? They have to lower the interest rate from 11 to 9% so they can make it a little cheaper for people to get line of credit, for people to get money from the institution. So they lowered at 9%, but we're still in a recession. They increased a little bit for 10. They increased it again, 11%. Fed raised rates to stop inflation. Remember, they're trying to fight inflation at the same time we were in recession. 13%. They increased it at 13%. They went very high. Inflation at 11.5%. And then they decreased it to 9%, 9.25% recession, combined with 12.2 year over inflation, which the inflation, they decreased it to 9%, but the inflation just kept going up. They decreased it again at the end of the year, and the Fed's lower rates to end the recession. They lowered 75. The GDP was minus 2%, and employment was 8%. It's very high, and inflation was still very high. And then they kept decreasing, and not notable event. They decreased it again. They decreased it again 5.5%, and recession was ended. And then they decreased it again. Inflation at 10%. Remember, recession ended at a rate of 5.5%, but at the same time, don't forget the inflation was still very high. As soon as they decrease it again at 5.25%, inflation just jumped back to 10%, and employment increased it again 9%. This is a very, it was a fight. This guys will never win. That it's just incredible. They increased it again. Inflation at a 9.4%, decreased a little bit. They increased it a little bit of the rates, and inflation fell from 9 to 7%. And 76, the GDP was already positive at 5.4%. The employment was 7%, and the inflation, it was lowered to 5.8%. Awesome. Now, they ended a recession with this whole game, the increase in lower inflation, lower rates. But at the same time, they fight in two lions at the same time. See what happens now. So they lowered to 4%. They from 6 to 4.70%. They lowered the rates, and they increase it to 5%. They increase it a little bit. They increase it a little bit at 4%. Inflation was at a 6, it's still high. And employment actually decreased it as well. GDP decreased it again. What happened again? They increased, they kind of doubled the rates, and inflation rose to 7%. You know what I mean? They increased it again. Inflation decreased a little bit. They increased it again. And 978, what happens? They kept increasing. The inflation kept increasing again. And they, at the end of the year, they increased to 10%, and inflation was 8.9%. See what's going on? They increased 10 to 25%. The inflation increased it again at 10.5. And at the very end of the year, they increased of 14%. My goodness. So, and the inflation was at a 12.6%, very high. So it means that they never, they kind of thought they eliminated the inflation when they ended the recession, but it never happened. They just made it worse. So 1980, what happened? So they were negative 0.3% of GDP, and employment was climbing high again, 7.2%. Inflation was stagnant, 13.5%, very, very high. They went very aggressive. They increased it to 15%. What happens? Recession began in January, inflation at a 14%. So I'm gonna go on. There's so much data that you guys can go on, and you're gonna see a pattern here that every time they play this game, increase, decrease rates to fight the inflation, they create more problems, they create recession, and inflation goes away for a little bit, and then it just keeps coming back. So it's just take a look. You see this pattern, and you start to understand how the system works, and then you start to position yourself for better decisions in your investment. Here we're going to take a look at what we just saw, those that the data that we just saw. Here is in a chart. This blocks, these gray blocks that you see here, and this is recession. This is a recession. This is where inflation is very high, and the blue one is the rate. Every time they increase the rates, we get into a recession, and then they decrease. It kept stable for a little while, and then they keep increasing a little bit, drop and increase. As soon as they increase to fight the inflation, we get into a recession. They decrease to stimulate the economy to come back and to control the inflation. They kept increasing the rates. What happens? We go into recession. They lower the rate to become cheaper for people to get capital from the banks, so they can stimulate the economy to come back, and then they still got to fight inflation. They kept increasing again to see if they can cool off the economy. The inflation, what happens? We get into recession. You can see this game, it goes on, it keeps going on. There's years they go very aggressive. This is the 1980, they went very aggressive, and we had a pretty bad recession as well. And they kept going down, so stimulate the economy, very low rates, and then they increase it a little bit to 8, recession, they lower to very low, and then you can see here between 95 to 96, the rates were maintaining between 5 to 6%. And as soon as they believe they have to increase a little bit, we get into a recession. What happened? They even decreased very, very low to 0%, between 1 to 0%. And you know what happened in 2000. This is the dot-com bubble as well, just to mention. This is when the tech bubble burst. And then they lower to stimulate the economy. As you can see here, if we go further, they kept increasing as well. And then we got the 2008 recession. That was pretty bad. And this game is being played for a while. It get to a point that they won't be able to do that again. It was just got really bad, man. So, very, very good, very good, very good, awesome. Okay, all right. Now all this data. I want you guys to what I want you guys to look at is just you guys gotta find a way, a style for you to start doing your research. You gotta understand that the market now only moves with the politics. All that cash that is on the sidelines that want to come in the market, or the little bit that got in, it was just a taste to see if the market will behave. There's a lot more money on the sidelines that are waiting for policies to be changes to be introduced in the crypto market. So you got to understand how things are played, so you can position itself. It's a new category. It's a new category asset. It's a very good opportunity. You got to understand how the game is played, position yourself so you can become a big fish. All right, so what is a DCA? I've been saying DCA, DCA, DCA. For those that do not do a course, DCA is dollar cost average. What is DCA? DCA is an investment strategy. That's pretty much it. You DCA is a system. I like to say it's a system for you to invest, not a strategy, but a system that allows you to invest without you using your heart. You know, the system that you set up, you know, every month or every day there's a percentage that goes towards your investment. That's it. I think that's a better for me. I think that's a better uh, definition. Okay, now I want you guys to look at uh, let's look at a CoinGecko. Just want to show you guys something. I like to pay attention is the coins. Beginning of the year, we started with 19,000. Right now, since all this since the bear market started, you have lost a couple thousand coins. As I said before, the previous video, we have a lot of garbage on the market, so we need to wash out all this garbage, and this is good. It's good we clean it up. So, but still a lot. There's a lot more trash to be taken out. You know, so there's a lot of coins that have no utility. There's coins here that shouldn't be in the market. So Bitcoin going to lower as 10,000. You know this is going to be very very low. All right, so the other one I want you guys to look at a coin market cap, which is the similar to CoinGecko, and so you know that coin market cap doesn't actually update it too often. If you notice, still saying 19,000 instead of CoinGecko is already updated 13%, 13,000. That's why I prefer using CoinGecko. Not to say that CoinMarketCap doesn't have great info. It does have great. It's a great platform. It's a great website to get info. It's very detailed. There's a lot of info here, but when it comes to update prices, data, and all that stuff, I think CoinGecko is way further ahead. They're way faster. I think CoinMarketCap is a little slow. All right, now let's take a look. Good friend Willy Woo. It's something here that I said I want you guys to take a look about the bottom. Those are looking the bottom. If we hit the bottom, let's look at one of the veterans. Just scroll down. That's not it. It's where is it? Yeah, right here. This tweet on June 17th, he said, if we are expecting a normal BTC macro bottom, we haven't seen this come to pass yet. The typical signs of bottom are not yet in. All right, guys. Though there are no guarantees, we will get them because both BTC and the macro markets are structured very different than prior history. I think that's very interesting because based on my research, I came kind of almost the conclusion that the bottom's not in because so many things played in the market right now. We are at the very risk of getting a recession. If we get into a recession, my friend, the crypto market normally gets hit very high. So, there's a probability that we may really fall down very hard if we get into a recession right now. So and then let's look at Glassnode. I think everyone should be following Glassnode or getting their articles and their report. There's just some great info. And I want to focus on what they actually posted. I think it was a couple of days. I think. Let me see if I can. Yeah, June 17th. Bitcoin miners capitulation track. So I want you guys to see something here. This is what Willie Woo was saying in terms of signs, right? The bottom side. 2014 to 2015 bear market PM was equal to 0.31%. 2018-29 bear market PM was 0.31%. The pandemic crash was equal to 0.41%. The China ban, when China was banning miners, was equal to 0.45%. Right now, at this moment, right now, there's more data coming in, right? PM was equal to 0.39%. So you can see we almost hitting the 24, 25, 2018, 2019 bear market PM. And what you want to see is the lowers at this 24, 25. The lowers, if I can recall, we're talking about 19,000, even lower, 6,000, you know? So that's something to pay attention. So we might get even lower than 0.31%. So if that happens, don't be surprised we get Bitcoin gets to 10,000 or 6,000 per coin. So there's the latest the latest week on-chain video report is live. This week we analyzed the sell-off last week. Bitcoin market trading below 20,000. Cost of BTC production model. Attention for minor sell side pressure by long-term hold. This is actually interesting. I'll definitely will look for this report, for this video, is I want to actually look at long-term holders. Long-term holders are those guys that don't want to sell Bitcoin, that think Bitcoin is not for taking profits. It's just to hold until it gets to $1 million or more. So if those guys are actually selling, is another sign that the panic has started. You know, we got a glimpse of panic, but I don't think we got into that really panic mode. But we'll get to that. Don't worry, we'll get to that. It's not pretty. I think that's what we will start taking the market more seriously and thinking that we hit the bottom, and you know, now we might see start seeing those reverse coming in the market. It might take a while, guys. Don't think it will happen overnight. All right, so we're gonna take a look, just a couple of data here that I want you guys to just to compare what's going on in the market. We're gonna use what happened in the dot-com bubble back in the 90s, you know, back in 1999 to 2000 when the dot-com bubble birthed, which is all the tech companies, they got bust and only a couple survived. And some of them we know they are Google, Yahoo, you know, and others, IBM and others. So there's a quote here I want to read for you guys. Something growing very rapidly. What's growing very rapidly for the past couple of years? Crypto market. It will always grow at a very rapid rate. The greater fool's theory that it takes over. People use leverage, and the extreme growth cannot be maintained. The leverage is exposed, and the crash comes about by ball. That's certainly true today in the tech stock. It has been true in crypto, as you know it. And it was particularly evidenced by the price decline in a complete SPAC. So guys, what he said here is It's very true. It's what's happening right now. What happened is when the crypto was growing so fast, people foaming in, FOMO. Don't forget that word. People foaming in the crypto market. But one thing that people did, because people were so eager to make money, and they think crypto market is a Ponzi scheme, so you just come in, make money, and get out. So what they did is they went and borrow money to buy Bitcoin, to buy other coins, which is very, very risky. Very risky. It's very risky when you take a loan to go into a very volatile market. Today's a one price, and tomorrow is a very low price or a very high price. So this is what happened. A lot of people took loans. They got exposed when the market crashed, and now there's all this liquidation happen, and we're just seeing billions of dollars being washed out every day. So this is there's so many great info in this article. This is the one that I wanted to show you guys, wanted to read to you guys. Here's an example of creating fear in terms of tech stock back in 2000. So take a look and you will see that um, back back before the crash, the greed for the tech right here between 98 to 2001, when was at the peak was in 1999 to 2000 before the crash of 2000. You can see here the greed was very, very high, was extremely high. People was foaming in, guys. It's very high. What happened when it crashed? The greed, the fear was an extreme, almost a zero right now, almost a zero. So it's a great article to take a look. There's great data here. So I'm going to link that on below. It's another one I want to share with you guys, which is this one. I'm actually gonna we're gonna just one quote that I want to read to you guys. But title is "What was the dot-com bubble? Why did it burst?" So where is I highlighted somewhere here? Yeah, this is what yeah, up to here. This is what I want to read to you guys, and you guys can read the whole thing and just, get as much info as you get. You guys can actually see that this happened before. It did happen before. Don't worry, the crypto market will survive. And those, if you invest in a very great, good companies with great utilities, you do very well. Yeah, at this time, we know we need a washed out in the market, and the tech stocks category back in the days in the dot-com bubble, it happened again. There was so much trash in it, and when the bubble burst, it cleaned up the whole thing. It almost cleaned up 90%. And then the ones that survived now are the biggest company on the tech industry, Amazon being one of them. So for those that invest back in back when the bubble burst, they literally clearly billionaires if they haven't sold it, right? But for you to be steadfast and invest in a company that's very low, you got to really understand the goal, um, the team behind the project, or the problem they're solving, the utility. You got to really understand. You got to be convicted. And when you see those down, the market goes down and going back, you got to be steadfast and always look at the final goal. Man. If you want to sell it when it hit to 1,000, that's you got to really hold it until it gets to 1,000. You got to believe it. All right. So when and why did the dot-com bubble burst? The first factor was rising interest rate. Do you see the correlation? We'll look at that data here. That was the Fed's, the balance.com, the Fed funds. If you look at it, you reading this article here, you see the first factor they think he kind of got to the bubble burst was the rising interest rate. And we know what happened every time they rise interest rate. So there's something for you guys to to pay attention when you're looking at the news. You gotta know what to hear, who to hear, and what they do, whatever that event happen in the market. You gotta really pay attention. Okay, the first factor was rising interest rate. The Federal Reserve raised the Fed funds rate, which informed most of other interest rate. Several times over the course of the years, 1999 to 2000, a higher interest rate tend to motivate investors to move money out of a more speculative asset like internet company stocks into interest paying asset like bonds. That's what happens to crypto. You know, they kept increasing high interest rate. Um, they increasing. People start freaking out. Since crypto is a very volatile, very speculative category right now, asset. So they stop moving their money. They stop moving their money to gold and other commodities. So, and that's what happened. People start selling, and panics gets in, and they kept selling. And yeah, the second factor was the one set of recession. As we said it before, every time they increase rate, they try to fight inflation. They cause recession. A recession, what happened? When we get into a recession, it's like a Black Friday event. You know, the market just keep dropping, keeps dumping. You think there's no end of dumping until it gets to zero, but yeah, it's crazy, man. And these two factors, among others, helped catalyze the burst of the overinflated internet bubble. That's what we had before. We had an overinflated crypto bubble, and it had to birth. He, now we are at a point that we haven't finished yet, washed out what needs to get out the market. It will it will get to a point that will washed out a lot. So just be patient and do your DCA, do your homework. All right, so another one I want to share with you guys. One of quarter um, forms here. There's a guy that the put up a great answer here in terms of what happened, what caused the burst of dot-com bubble. You know, his point here is that there was the crazy valuations in the companies. There's so many companies that are worthless, but they had a very, very high um, market cap. So he says crazy valuations. For example, Martin Cuban, owner of Dallas Mavericks, sold broadcast.com to Yahoo for around 5 billion. At the time, broadcast.com had only 100 million in revenue and was unprofitable. To put that in perspective, if Apple was given the same valuation as broadcast.com, it would be valued at $10 trillion right now. Anyways, today broadcast doesn't even exist. This is just one of hundreds of not thousands of similar company with mind-boggling valuation at the time. Investor periodically get a way to exorbitant past push asset prices through the roof. Today we're seeing it with social media, a small segment of hot startups, Twitter, Snapchat, blah, 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 blah. That's has nothing to do with management necessary. It's just the investor being silly, playing the greater fool's game. Truly, it is fascinating era to study. Remember, I will appropriately, human behavior doesn't change too much. We forget too easily. That's one thing I want. I kind of agree with this guy. Human behavior doesn't change too much. We forget too easily. It was back in 2008 that we had this great global recession that almost annihilate the whole financial market, and because of leverage, guys. And we repeat the same time, we repeat the same things, man. We repeat it back in 2020, we repeat it 2021, and then 2022, we get what we did. All right, so now some great positive info here that I want to give you guys. Here are 10 tech companies that have bounced back from the dot-com crash. So you guys can analyze the type of companies that came out big on a crash, the dot-com bubble. It was a Priceline online travel service, Amazon, we all know Amazon, Adobe System, we all know Adobe, we all use Adobe. ISML, this is a chip gear maker. Intuit, financial software maker, we know that. IBM, we know that is a tech service giant. It became a giant as well. ARM, chip designer. You see the category of the companies that actually survive. You see the utilities. That's why I want you guys to look at it. Look what utilities, what type of categories that these companies they are, and what they survive. And if you want to go deeper, do a research on a company and see how did they survive the dot-com bubble. ARM, chip designer, one more again, and then we get this eBay. We all know eBay. They say it's like Amazon, which is like, yeah, it's just a little different in the platform, but it's almost the same thing. It's an e-commerce website. Oracle, you all know Oracle, database. SanDisk, flash memory chip maker. And there's more, right? There's more. All right, and lastly, I want you guys this great article, which is by Wealthy Five, and he kind of have so much info what happens to what he does is what they did is a history of market crashes, how they recover. So suggest you guys to really take a look, read it, go over several times. It's very they have so much great info here. Suggest everyone to read it. I'm gonna read the first one, the first crash, which is the tulip craze, 1637. What happened? In 1593, tulips were introduced in the Netherlands and became popular. After contracting some wires, they started giving their palettes and multicolor effects. Tulips became widely sought after the economy. After the country and the Dutch people would spend a fortune to own the plant. Some would even trade their life savings or land to lay their hands on the exotic bubbles. How similar is that to the crypto market? I think you heard crazy stories, people doing some crazy stuff. I heard people selling their house, selling everything just to buy Bitcoin. You know what I mean? I think it's you gotta really learn from the past so we don't make the same mistakes. So this is a great history, power history of all the crashes. You're gonna see a pattern here as well. So all right, continue. As a result, the price of tulips skyrocketed, forming an economic bubble. We're talking about 1637, guys. It's like we're looking at the 2022 that we see in the crypto market, and the other markets is just bursting, ready to burst at any time. This is what happened in 1937. The price of tulip was so inflated that it reached a point where no one could really afford it. Yeah, Bitcoin got to 69,000, and a lot of other coins were so expensive that it didn't make sense buying, which triggered a sell-off. What happened in the market? What triggered? This is a different story. But it triggered sell-off. Then a domino effect took place. Bubbles were worth nothing. You see, when triggered a sell-off, then the domino effect took place, which is a lot of people just start selling, and the price just kept going down. For instance, it got to nearly zero. Here is it kind of get to a zero. It was worth nothing, meaning people would make a loss when they sell in their lupus. How did the market recover? Now let's take a look. Tulip holders sought help from the government, but none of their measures were successful. I want you guys, I want to read that again, guys, because for the new era, we all know who caused recession, all this turbulence in the market. We all know it's the government. They just won't stop spending, man. Yeah, so tulip holders sought help from the government, but none of their measures were successful. Eventually, the storm ended up passing without causing any devastating damage to the Dutch economy. So for you to know that it will pass. Right now, for those that actually had myself and many of you guys had the pleasure of having a taste of the bull market. It's very sweet. It's very sweet. At the same time, the bear market, you got to have a test of the bear market. The bear market is very sour. It's very, some people get sick and it's just crazy. It's just horrible. It's horrible feeling being in a bear market. But you got to understand, you got to have the two experience, the two side of the coins. And the storm will pass. This, even if Bitcoin goes to 1,000 or $100, it's just the tech knowledge behind it. It will survive. Don't worry, the tech will survive. And Bitcoin is not the only coin. And there's other coins that's coming with different utilities that we actually want to make a very huge impact to the countries, to the world, so the storm will pass, guys. The storm ended up passing without causing any devastating damage to the Dutch economy. But more importantly, people started learning about the dangers of herding mentality in the financial world. What is a herd mentality? FOMO, guys. FOMO. For those that did our course, FOMO is fear of missing out, guys. Fear of missing out. That's what her mentality is. People do not want to miss what's pumping. When it's pumping and everybody's jumping in, that's the wrong. You should sit down. You should analyze. You should do the opposite. All right. This is it for now, guys. Now I want you guys to take your time, do your DCA by doing your research. I showed you guys several ways for you guys to start thinking what might be coming for the future, what might how to position yourself. I wasn't in details, but I gave you guys two sides. If you guys what happened in the dot-com bubble, you have some history of crashes as well. Now you know what causes the recession, what causes the inflations to go up and down, what causes the reason why we have so much liquidity at one time in the market to incentivize the market to keep going, why they increase rate to cut that liquidity so they can fight the inflation. But as soon as they fight the inflation, there's a consequence, which is the recession. So now you understand how things working. If you listen to me one time in this video, listen again and again and again, or go over the data that I'm giving to you guys, and take your research from there, because it's very important you understand. Very important you understand that whoever comes out on this bear market well prepared, well invested, it will last It will be the last one left, and it will be very rewarding because at the end of the day, don't forget you will hear a lot of news saying that the crypto market will go to zero. As soon as you get to 10,000, we get to 10,000 or even to 13 or 11, 12,000, we're going to hear the media is just going crazy saying that the crypto market will go to zero. Tell you guys. Telling you. So be prepared, guys. All right. This is it for today. I hope you guys read the report for Luna Opportunity. There's a lot of history of fiat currency, how fiat currency works. What is it? Well, the other thing is you got to understand what a store value is. There's some info there. What is a store value? How does it work? You know. So I'm gonna do a quick video on that report because I believe some of you guys didn't even take the time to take a look. And but it's something that you gotta understand. And then there's something that we mentioned there, the fiat currency. We take the look how fiat currency works. That is connected with stable coins. How do stable coins work? And the same flaws that the fiat currencies have is the same flaws that stable coins have. So you gotta really understand that. So you gotta be prepared. If fiat currency goes to zero, it's worthless. People don't trust it anymore. And this is the same fate the stable coins have, because stable coins don't have no limit. They can just create out of the thin air. So it's the same thing as fiat currency, guys. There's nothing special. The only thing special is the technology behind it, the blockchain. That's what is special. All right, guys, don't forget to subscribe, like the video. And let's skip that hope up, guys. Don't lose hope.